Hello, hello, hello. I'm back again. Hope you're not sick of me yet. 3 times in one day. I don't know if I can even stand watching that. Good afternoon, everybody. Hope everybody survived this volatile trading day. And just to head it off at the pass, no, did not appear to be anything capitulation related today. So we got more volatility up ahead. I mean, this week is going to be super interesting. If you wanted to just take a week off, this might be a good one to do it. Hey, George. Hey, Patrick. Hey, AP's World. You're starting to become a regular. You know what that means. If you are becoming a regular and not subscribed yet, please do consider subscribing, hit that like button, and leave some comments separate from the live stream. Come back after this is over. Leave some comments, especially if you learned something. Help get this information out to more people. This isn't a hype stream, or it's really just trying to be a very credible stream, giving proper information to counteract a bunch of well, I don't want to insult anybody, but there's a lot of junk out there. There's some very good things. By the way, new Futures Edge podcast, and it's live on the YouTube channels. So you could go to Spotify also, but it is live on the YouTube channels with Jim Iorio. So check that out after you're done with this, or check it out sometime tonight. Lots of good information always in there. Hello, Brian. Hello, Anissa. We got a little snapback end of day rally. Very so slight. I mean, if you tuned in at the lunchtime, I tried to outline what I was watching for. We got that 1 hour close below the 62.5, and then we retested and broke the lows. By the way, why even if we bounce overnight, everything tomorrow 7:30 Central PPI, that's going to be key. If it comes in less than forecast, could we see at least some kind of turnaround Tuesday? You might very well. Would it be a longer term bottom? We don't have. I did not see any capitulation metrics in that there was just panic selling yet. Generally, when we have a capitulation bottom, you get panic selling. You get some things just go in the bid offer spreads go wide. The bids drop down very rapidly and can't absorb stuff. We weren't there yet, and we could get margin calls tomorrow with some people. So even if you get a bounce based off then you with JPOW with on Wednesday, with all the other numbers coming out and option expiration Friday, I'm just we got to trade the patterns. That's all I can do. That's all I can do, because do I know where this thing's going? No, it's trending down. Could we get some kind of bottom in? Yeah, sure. But you got to keep tight. Well, it's interesting. You got to keep appropriate stops. If you're trying to call like shorter term things on an hour, 15-minute chart, 5-minute chart, you got to keep your stops relatively tighter. If you're trading the daily or 4-hour chart and you get some moves off that, you got to keep appropriately wider stops with a decrease in the position size. Why? Because we can still get a lot of volatility that you don't want to get taken out of a position prematurely. So it's sort of very interesting position. Let me switch over here. No. So again, thank you everybody for being here. Thank you, Wavy. Hello to you. Buyers gone missing, but selling's not done, even with a bounce. Red tomorrow. We shall see, William. We shall see. I mean, everything's going to be tactile this week. And, there's more and more chatter coming out that there could be a 75 basis point hike on Wednesday, which, wow, that would really destroy they could do it, but that would destroy their credibility. I think the more the chatter is going to be for a 75 hike in July if they're going to go that way. But we shall see, because a 75 basis point hike could really catch the market off guard still. We'll take a lot of looks at stuff. A good afternoon, Sterling. Hands numb from sitting on them. That's good. Again, this is great to learn. This is a great learning opportunity, but don't flush money away. Please, this is not the market to try to be an egomaniac trader and say, oh, I called the bottom. I did this because the bottom you think you called could get taken out very rapidly. And, and trying to say, there'll be people out there, look, we called the bottom, blah, 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 blah. In what time frame, for what duration, and everything else. There's proper setups, there's proper trades, and you got to manage risk in these markets because you want to keep your capital preserved for when there are great trades. And calling a bottom is not, you're not trying to bottom ticket. Even if you get a rip your face off rally day, can we get a rip your face off rally that could continue for a couple weeks? Yes. And will there be great opportunities in that? Yes. So don't worry about trying to call the low. Try to call a high probability move and then manage your risk. There are too many people out there trying to be a hero, especially on the YouTube. They're trying to oh, well, look, we called the bottom. Well, how about every other thing you didn't call? Don't just, that's why you won't hear that on here. If we had a setup that happened to get near the bottom, then that's great. If we don't, then that's great too, because that's what these markets are about. Yeah, tons of long dated puts still coming in. Again, even if we get a rip your face off rally, it'll just be another setup for another major rollover move. Hey, Amit, glad you could make it. Good day, Davey. VIX has a lot more upside to go, and it tagged that. Oh, we'll get to the VIX, but it tagged that 87.5% harmonic nicely this afternoon. Mike, thank you for keeping me and all of us out of trouble. Gain levels forward and double harmonics and doubles is huge and a life changer. I'm glad. That's what I'm here for. I am actually here to help as many people as possible. There's too many people, and look at all the people who said, take your money, put it all into crypto, take your money, put it all into Tesla, take your money, put it all into this, and now they're like, oops, I'm sorry you blew up, I'm sorry. Well, that wasn't risk management, and you'll never hear me saying that. Never. Bob won't say that either. Where do we sit here? Oh, let's just look and I'll get some more comments. Well, hey, Mickey D's. I know Oracle was up. They beat earnings, so that's a bright spot. CME, little bright spot because of all the trading activity. TFC, but not many bright spots in the market. DRE, REIT, that's interesting. Lots of carnage, lots of mega caps. Again, I said we were watching for another rollover in there, but there's a lot. There was nowhere to hide in the stocks pretty much. All you could do was minimize your losses today. This is very interesting. The FedWatch tool on the CME. If you want to know this, just go to CME group and search for FedWatch tool. It's a really good thing to keep an eye on. Now, this has climbed pretty drastically, so I'm going to keep a very close eye on it tomorrow because there are some credible rumors coming out that says the Fed is considering a hike. I think if PPI tomorrow is just a complete blowout number, I will then say it's more possible, but I think they destroy their credibility then because they're literally admitting they're behind the curve and now they're scrambling to catch up. If PPI comes in in line or a slight beat, I think they'll stick with the 50%. But again, we got to trade the markets and we got to look at the negative gamma. I keep warning about this. I hope people are understanding this because not only... And it's not just to the downside. This is where the rip your face off rallies come. And we can get these volatile swings. By the way, I just talked about Oracle after hours. So that is done. Not much going on. Pretty much until Thursday before the open with Kroger and after with Adobe. There's really not much going on. You see here, notes just got absolutely slaughtered. This was a massive move for 10-year notes. I actually have that up there first. Let's jump back here. Let's do a little Actually, let's say hi to some people. Let's see. You didn't hype your gamma according earlier, but let me do it. Watched it twice and have much better grasp of the significance on trading beyond just options risk. Good. That's why it's important. That's why I've started to point it out more and more, especially in bear markets, especially with vol, because you have to be prepared for these quick and sudden reversal moves, especially going into options expiration. I mean, Thursday and Friday can be brutal this week for reversal moves. So that's why, if you can take the week off, if you don't have to trade, don't. Don't worry about missing a move. There's always another move. They're not doing 100 basis points. That's not going to happen. That's not going to happen. Last 75, 75 basis points was in like 1994. They're not doing 100. No, that would. You want to see markets go friggin' nuts. 75 is a stretch because that's going to destroy their credibility right there. Oh boy, William. Good morning. Well, what time zone are you in, John? It's afternoon here, but if it might be morning for you, maybe they're giving the chatter mark so it can rally off a 50 basis point hike. That's the other thing, you get the chatter for 75 and then they hike 50 and they were dovish, but God, it's all stupid because again, in this environment, is good news bad news? Is bad news good news? Who the frig knows? Got to trade the patterns. By the way, this is barely hanging on to a double in the S&P, so that's the only thing. And I hate to even list, I will list this, but a 4-hour close above this high, and I would not recommend most people do this unless you're very nimble, but I am going to show you stuff I follow. 4-hour close in the next 3 bars above this high, 37.8275 is a hyper aggressive long. Okay, hyper aggressive long, and people ask, well, where would you put your stop? Again, easily. Well, if I could draw them the right way, I'd put my stop if this triggered below the 62.5 of this move. Why? You close back below that. What do I stress? Statistically, it favors a retest of this low area. So do I want to be in a long anymore? No. So it's actually a fairly tight stop. And it doesn't really matter because you're still going to take the same risk per trade with your position size, but the stop isn't like some weird out of the world location. So that's the only aggressive thing. And then it would have to roll into on a close above 38.1550, then we've triggered the double. And again, this is barely hanging on. If we roll back down and get through this afternoon's lows, the double is off the table. Oh, some people still say Fed has credibility. I don't. I think they blew that a long time ago. Speaking of patterns, looks like YM, NQ, ES, and RTR all have potential double bottoms on the 1 hour. Yes. No, on the 1 hour you do on the S&P. On the NASDAQ, this went too far. NASDAQ went too far. Dow went too far. S&P is the only one that's tradable with the targets. That doesn't mean on these other ones, if you did get a close, see, what's interesting is here's the key thing I'd watch on the NASDAQ. You see just spiking off that afternoon harmonics I put on at lunchtime. Right there. Your move, let me just finish the S&P. I'm jumping around too much. And then we'll, oh no. We'll take a look at Bitcoin. Even if we have a short-term bottom in Bitcoin, guys, you're going to see more things blow in the crypto market. It's nowhere near a long-term bottom. I'm sorry for all. I've been warning about this for a long time. It's why I stopped covering it all the time, because I wanted people to get out. And I'm not, until we get this garbage out of here, I'm not really promoting it. Hey, not that I've ever promoted it, but I'm not even trying to advertise it. Thank you for the super sticker, Lauren. Again, fantastic member of this community. Everybody shout out to Lauren. The double top on NQ triggered as well. The 1 hour double top. The 1 hour double top. What 1 hour double top on the NQ? By the way, this was not a double top. You can't trade that. It's a reversal move. Hello, Sashi. Welcome. USD ripping after Fed's Brainerd speech. Is continuing to go. Yeah, it was ripping this afternoon. You see here. see here, even the higher move. So the double's still in play for that, but we got to reverse the harmonics. I'll do some analysis on that too. Let's see. Do you see ES at 3,200? My next major target on the next push down on the next major target, which I doubt we're going to get on this down move. I think we'll get another corrective rally before. My next major target is this 3,500. This line right here is at the 50% harmonic from the COVID lows. That's my next major target. And it's also this prior resistance becoming support and a break. And this is a very key area. So, and then my next target beyond that's the 60. Oh, I'll just put them up here, then I'll take them off. See here, if I take this up here, see here's that line, see it disappeared. That's my next minor target. Then my next major target area is about 3250 to about 3160, and we'll have to fine tune it as it gets closer to there. Then, if we close below 62.5, COVID low time. COVID low. Remember, I told you it's very hard systematically because a lot of stuff can happen with long term. Now, we still have long term prices, but it's really hard to nail the exact low because of all the unfolding things that happen. I found very few systems that long term are highly accurate with price projections. You got to come up with your price areas. Then if it hits it, it's a reassess. Well, I'm glad you're not 100% in Tesla, George. I am friggin' glad. That makes me happy, and there's nothing against Tesla. So please, if you love Tesla, please don't light up my stuff with complaints. I don't think anybody should be 100% in anything that's not risk management. Even if I love the stock, you're not 100, whatever stock it is, you're not 100% in anything. Because what if something bad happens? You've put everything. You shouldn't be 100% in Bitcoin. You shouldn't be 100% in crude or the S&P, even when the S&P is rallying. Look, even the spiders, when the S&P is rallying, yeah, you can put a percentage of your portfolio, no, but would it be 100%? No, I diversify between a couple different. If you wanted ETFs, I diversify between a couple different ones to maximize some things. Let's see. I hate when people think going all in is trading investing strategy. I've lost a lot of money when I first started going all in. And yes, but that's where people get these, oh, I made 300% return last year. Well, you took a hell of a lot of risk then, because yes, that's not normal, and that's more akin to gambling. And can you get away with it? Look, there are people I know turned 100,000 into over 1 million in a year and given it all back because they didn't manage risk. It was great on the way up. They didn't manage risk, and they thought, oh, this is easy. Anybody can do this. Well, start doing this in this kind of market. You know, yeah, a little over 15 billion shares traded today if we look at the volume. Remember, volume follows price. Remember, I've talked about that before. And if you look at the lower volume days, they're the green ones. The higher volume days, especially this one, I mean, yeah, you get the outliers, but look at the higher volume are the sell days. The lower volume are the rally days. So what's the long-term trend still? We are in a bear market conditions. I'm not going by the friggin' standard definition. I'm going by, hey, systematically multiple systems. Hey, volume follows is up on the down days and lower on the up days. That's another thing you can keep an eye on. Now, once that starts shifting and you start getting more and more volume building up on the green days, you're in for a more substantial rally. Yeah, Wednesday is VIX expiration. Mike, I'm sorry for asking and know you cover it, but notes go down, the yields go up. Yes. Notes and bonds are inverse relationship. So as the price of the notes and bonds go down, the yield goes up. Okay? And that's because of the relationship to par. Uh, So just keep that in mind. And when you hear people say, notes are rallying or notes are selling off, make sure you clarify and you just don't mean the yields, right? You mean the actual notes or the actual 20-year or 30-year bonds. Because a lot of people mix up that they think like yields are rallying, so that means the bonds or the notes are rallying. No, they trade inversely. So you have a lot of people who get that wrong, especially newcomers. Where do we sit? Hey, Waka Waka. Oh, please stop. We're not blaming Elon. Credibility gone all the way back to Greenspan, but who's keeping track? No, you have. I mean, the Fed. I wouldn't say credibility gone all the way back to Greenspan. I say the Fed's been in this try to save the market mode, and since Greenspan started ushering it in, then Bernanke just put it on steroids, and ever since then, it's been this let's save the market at all costs instead of let's maybe not mess with everything and let stuff play out a little more. It's like putting out all the small forest fires and not letting any of the dried off vegetation burn off, and then once you get that big uncontrollable fire with high winds, it just spreads and you see these devastating fires. It's the same thing. It's because you didn't let some of the small fires, or you didn't do controlled burns, and you didn't get this underbrush, which naturally needs to get rid of. That's why there are smaller forest fires are okay. You keep putting them out too quickly, you don't get some of these controlled burns, and you get these unstable conditions, and that's where you have these major fires. And that's what the Fed's literally created now. The Fed's created a massive forest fire. I think it's all overblown. Markets moved up on leaked news of 75 basis points, but we won't have shock with Fed sticking to 50 basis points. The market will shoot up so high it will rip your pants off. And it could do that. And there'll be some momentum trades if it does. I mean, this is a hard market to predict. Uh, no, there's no guarantee of that. And again, we had saw people on here last week saying it's too bearish, it's got to bounce. It will bounce at some point, but it's not too bearish. This is not where, the amount of people today who ask me, is the low in? Is the low in? Means the pain point's not there yet. When people throw in the towel and say, I don't even want to look at this damn market, then we're going to get to a more significant low. Mike, on SPY longer term, how would you draw your double extensions and thoughts on key levels before another rally on the spiders? I mean, we already have the extensions drawn. I got to reverse that. They were from the reverse extensions. We went through this next level. So if we continue to sell off this week, I'm really watching 370.35 to 371.32. How's that? That's the reverse harmonics and the forward harmonics from the last major swing down. And that gives us this major cluster here. Also, you've broken key resistance, so even on a rally here, and if we break above this high, we'll start doing some gap harmonics. So we don't have a low in yet necessarily, so I don't want to stress the gap harmonics, but that's the thing I will be focused. And to fill this gap takes it back to the breakdown zone. This is a area of, right there is your significant level, right in front of, let me just verify. Yeah, it's close enough. So until then, we have to just go off this. But look at that. There's your 37.5% harmonic right at a significant level and the breakdown zone. And if you're wondering why isn't the breakdown zone here, because I tend to use a significant level. So on any rally above, if we don't put in a new low above today's high, and by the way, a super aggressive buy is a close above today's high, a daily close, and then that would be the target to the breakdown zone. On a push lower, we go through today's lows. This area is my next. And then if we really tank, if something catastrophic happens, 360. And for the real long-term stuff, remember, you're watching the 50% harmonic, which would be the next area. And that's right at this. Look at this, how it lines up with the breakout zone. And your 200 week. 348 is one of my longer-term targets in the SPY. Mentioned the NASDAQ. This major double still in play. I doubt we'll get to that anytime soon. I'll let you know if that's invalidated. This minor, this is not. Well, key area I'm watching is about 11,500. Why am I watching 11,500? That gets above the breakdown zone. And then we start targeting a bigger bounce back move. And the potential bigger bounce back move above 11,500. See, that's also above the 12.5% harmonic. So then I'd start targeting the 4-hour rotation zone to the 25% harmonic. And I can fine tune it with projections, which we can't really do with a lot of credibility yet. But your short-term projections would be something here. So this would be the target area right in there if we don't make a new low, which again, that's about 11,685 to 11,7. So that's how I map out any bounce plays on that. Going lower, since we have to keep on both sides. The next, we don't have a great pausing bar yet. We'll have one by tomorrow morning, depending on overnight price action. So for the time being, I'm back down to 11,127. If you had to do a level down here, if you had to use short harmonics for overnight, then those would be, I'd use 11,245 and 11,205. Dow again, coming down. I put these harmonics on at the midday update, bouncing off the lower one rather nicely. Harmonics for this for overnight. Again, we don't have a double on here, but my minor level would be 30,272, major about 30,203. Area I start getting interested is if we really start trading above about, let me reverse this by the way, hold on one second. Let me reverse the harmonics. So roughly around above 30,755, I get interested on a return to the 4-hour bounce play to about 30,980 to 31,000. Is a very aggressive buy also on a 4-hour close above this bar's high. 30,759. And I would not recommend, unless you're a very experienced trader, most people taking anything like that. Russell finished its double today, double top, and then had lower. Russell, not a great bounce into the close, but still holding up. Now, Russell, you do have a potential double bottom. This is valid. So this one could be traded also. And I definitely want it to be triggered on a closing basis. 1745, 10, 1764, 1774, 1783. And you see that takes it into the rotation zone, and it is aggressive. And also you do a 4-hour aggressive buy on a close above this high of 1733.4. So there are, but I'm going to stress, those are hyper aggressive moves. So it's not something you put on and walk away. So if you're not trading overnight stuff, or you're not over in Europe, I'd just pass. So this is not the environment I want to put something on and then wake up tomorrow. I mean, you could put it on if you can trade the futures and put your stops in there. That's fine. But if you're doing stuff manually, no. By the way, crude held up still nicely today. Really nice, still closing up. So this is a nice orderly little pullback. Yeah, we did sell off a little in the afternoon and then rally back up. You can see here a little volatility in there, but I'm watching to see if we really break above about 122 again. That's gonna pique my interest too for a short-term long again. Uh, Gold just got obliterated along with a lot of other stuff. So now I'm patient, but if we close below 1831, hands off on gold again for me. Silver, what's interesting, if you're watching the spot, by the way, the double did trigger in silver. It triggered on this 4-hour bar, bounced off the first target, but I'm expecting silver. So hands off now for me. Silver next targets are 2080 and 2055 with this. Copper closing below 62.5, so that now favors a return to these lows, the low areas back in the middle of May. We already talked about notes. We got the bounce, a little aggressive buying in the afternoon, like going into the close, which was very interesting. So going to be watching to see if this rolls and then puts in a bottoming pattern in notes. But here's your thing. You see the sell-off move there, Amit. And you see the rally here. By the way, the potential double is off the table in notes. If it yields continue to rally, next major target is until about 3.59 to 3.6. Where else do we sit? Let's see. I'm just scanning. From the midday update, why would the JPY 10-year rising above 20? Because they're trying to peg it. They don't want it to rise above that. And that they're literally throwing trillions of yen at their bond market to keep it pegged there. What happens when you throw trillions of yen at the bond market and they lose the peg? That's why it's a problem. It could turn into, and depending on how far it ran, could turn into a Japanese yen currency issue. So that's why I'm keeping an eye on that, which would have a ripple effect. The two major currencies I'm keeping a very close eye on are the Swissy and the yen. Because you see some outsized moves in those, it could get very interesting. Can we see the SPY go to 350 this week? I doubt it would happen. Is it possible? Yeah, if the market just gets utterly destroyed. Is it likely? No. But it is possible. In this kind of market condition, it's not out of the realm. You can have, you like last week, what was the range last week? Almost 21 points. This week, we opened at 381. 21 points would take it to 360, which is my next major cluster. So we need a massive crash week. It would have to literally wipe out the market for the short term, but we'd probably get a capitulation bottom then. Not likely it happens. But in these conditions, with what we've seen, if something blows up, a fund blows up, or we have a big issue with the yen or the Swissy, you could see some interesting unraveling of positions. And that will get very interesting if the yen does go to 150. Safin, welcome, welcome, welcome. What stock is good to invest in now, and how much lower can the stocks go? The stocks can go a lot lower in the long run. What's good in the moment? As I said in my weekly overview, there isn't a lot of good right now. I'm doing scans, and there just isn't a lot of good stuff. So that's what I was saying in the sector overview. If you didn't watch it, you should. I mean, I'm going to watch for things like Dollar Tree. All right, you see today, Dollar Tree holding up at least nicely, especially if we can roll over and get some of these gap fills out of the way in here. I'm still watching for a more ups move because why Dollar Tree, dollar discounter. We hit a major recession play. PDE is a little high for me, so I'd like a pullback in there, and I'd like a stronger pattern. But those are kinds I'm watching for setups in. Stuff along those lines. Walmart. What's interesting with Walmart, we got that close. We're closing in on this now being a potential double bottom. Again, we have gaps left behind. Is it there'll be some aggressive buys before that triggers. There actually is an aggressive buy and a close above this today's high. And it has come down enough to form this double bottom. But then the longer term play, which is not anywhere near triggering yet, would be for a play to this. Look, it would take it back to roughly its 200-day if all the levels get hit. So those are the kind of things. Why Walmart does, better. Its PE still a little high. But if we do get some interesting conditions, that's why I'm a little hesitant on these still, but they'd have to trigger the patterns first. Okay? But again, there's not a lot out there that's super interesting. See, I mean, Coke held up well today, but I'm just not loving Coke. If we get into an earnings with inflation, if they get into an earnings compression, at 25.90, and I'm talking fundamentally, and they haven't hit. I'd like to see a much bigger pullback in Coke before, but once we get a bigger pullback in Coke, it's something I'll look for with a better PE. This is my problem. Coke's considered a value stock, right? And this is not a great value, especially where we could have a compression of earnings because there's only so much they can pass along to consumer. So you could see, even if their price, their price has to drop. If their earnings drops, their price has to drop even more to get this back in line. Hey, Mike, welcome. Welcome, welcome, welcome. You got to look at BTC one time for the bulls left. There'll be a time for Bitcoin again after we really get the flush out. Bitcoin through the next harmonic level, 23,713. Can Bitcoin still get rallies? Yeah, because there's you should have seen all the wash trading. I talked about it yesterday. There was tons of wash trading Sunday morning. But where are we sitting longer term? Through this harmonic. Next area, we're closed below the 62.5. So next major level I'm watching is about 18,788 to 19,9. And then we favor the return to 12,000. And it could even go lower than that. Especially once Tether blows. And now you have this major support level. You get to a weekly. So you had support here. Support here. Little higher support base there, but support here. All that's resistance. So everybody who's essentially bought since December of 20 is underwater if they weren't harvesting price in here. Coming back interesting enough to return to the 200 weekly. So at some point we could get a little bounce in here, but there's no great bottoming play. And longer term, we've triggered a massive double top. And we're below the 62.5 on a weekly closing basis, so that easily favors. And that could even favor a return to 3,500. Ethereum bouncing off the 200 and the 1230 harmonic, but I'm expecting after any bounce, I'm expecting us to hit 955 next. There is not capitulation move. This is not a capitulation move yet. If I see it, there's not signs of it yet. This was too orderly, the selling. And too many people still, is this the bottom? Is this the bottom? Is this the bottom? You generally get even a midterm bottom when people stop looking for it every friggin' hour. Did the Bitcoin bottom? There we No! Please. See, people saw that the Bitcoin bottom. Is there a pattern? No. You get a trade above about 24.2, you could see a short-term snapback rally. Where would the snapback rally be? Could be 25,450 to about 26,190. That's about it. That's not a strong bottom pattern, though. It could be a short-term bottom pattern, but it's not a strong long-term bottom pattern. And we got some more flush out to do in the crypto space. Tesla, by the way. Didn't get to Tesla yet. This nice, really nice double top play, by the way. Just wanted to point that out. That was a beautiful double top play. 15-minute close below it with the markets turning into dirt again and coming back down. Full targets hit. Now we do have a potential double bottom play with the gap left behind. So that's what I'm focusing on. If the Nas gets some strength, 669.50 above there, 682.15, 688.47, 694.80, which is the virtual gap fill then close to it. Watching with your gap harmonics, and it's just a nice little front run to the 60 before the 62.5 level. So that's the only thing from the bullish side. I'm watching for a short little bounce potential. Does that even have to trigger? No, because now we have the close below the 75, not yet to the 87.5. So I'm still watching for another rollover move. If it doesn't happen tomorrow morning, you know, we should easily retest this low area from back at the end of May. Let's check in on Oracle. I know they beat, and I looked at them earlier. That's a pretty big rip. How bad did they? That's pretty decent. So there'll be some nice gap fill plays though coming here. Nice gap fill plays. Still expecting this to roll over again, but we'll be patient with that earnings. Returning my major. See, right off that weekly 200. I keep talking about that weekly 200. Boom. And now we're getting a nice bounce. So anywhere from about minor, we're above there. So anywhere between about 73 to about 75, we'll watch for a potential another rollover play. Thank you, Mike. You're the GOAT. I encourage new viewers to watch some of the live streams from last year. You've been calling for this major correction for a very long time. Yeah, I started warning about it even last November or before then. So nobody who's been a long-term member of this channel should be surprised. What do you mean indicators are broken? RSI doesn't matter anymore? Which RSI are you talking about? All right, you are welcome, John. Let's see. What's the point of buying the dip if the market will keep on going down? Well, it depends what your time frame is. Will there be rallies? Will there even, I'm going to say this for newer people here. So if you've been a long-term person, I'll chat with you later. Remember, I'm going to point this out. What's the point? You got to know your timing on stuff. Remember, a lot of you, I know very few people remember this channel who were trading actively in the .com times. But you get rip your face off rallies. That can last longer than you think. And they can be multiple weeks, and they can run farther and harder than you think. But are they long-term bottoms? No. So that's why you'd have to know your timing. By the dip, there are certain dips that if you're nimble and trading these can be bought if you have good signals like this from the, I'm just going to go low to high, 44%. All right. Let's go realistically. If you close to close, 31%. You got another rally in here. Well, I'm just going to give you an example. 31%. 52%. That's enough. So, are there things you can take advantage of within the context of a larger bear market? Yes, you have to wait for the good setups. Don't try to call the low. And why I was saying, 44% low to high, you're not going to take all that out. But could you take a nice 10% chunk of that out easily with good setups? Yeah, you could take maybe 15%, maybe 20%. You're not going to get that 44%. But if you're just going to keep buying the dip and holding, that's not a strategy in these markets. That's not a strategy. That's, the buy the dip works in a raging bull market with easy money conditions. It does not work when you get you got a 3-week bounce. You got only a 1-week bounce. You got a 2-week bounce. That's why you have to be nimble. And at some point, yes, we will get probably a 3-week bounce that will go up 20, 30% from where it bottoms. And you might take 10, 12% out of that if you're good. But is that the long-term bottom? No. Yeah, I'll show them Cisco for new people here. And I still know people. Did I put that? No, I put in Coco. Let's trade Coco. Cisco. Let me just go to a month. I know people who are still in from up here. They've been holding it, trying to get back to break even. You think I'm going to hold a stock for over 20 years to get back to break even? You're insane. Okay? But look, they're rallies, but look at all these sells. Even look before it even put in a decent bottom. Come on. There's things that are tradable. That's why you watch for the patterns. But then don't, manage your stops. I'm going to keep stressing that to new people. Know where your stops are. And if you're going to play a bounce, know where to get out and have targets. Why do things I put on the charts have targets? Because then you know to take an action at that. And you're not just going, what should I do? I bought. Now what? Do I hold it for a week? Do I hold it for a month? Do I hold it for a year? Do I hold it for 20 years? Yeah, looking at historical time frames, and people don't go back and really study the markets, and they think this time is different, this time is different. We've had the Fed involved way too much. So, but go identify how many times that bonds and stocks are getting obliterated at the same time. Because normally what happens when stocks get obliterated, the money flows into more of a risk-off asset like bonds or notes. What's happening now? Well, the artificial interest rates have been kept so low by the Fed that you now get the double whammy. Think of a 60-40 balanced portfolio. Both sides are getting hit. Why has it traditionally been a 60-40 portfolio? Because if one side's getting hit, you generally have the other side to offset it. But that's not what's going on. Everything's getting crushed now because of the irresponsible nature of all this money printing. So there is still more pain to come. You don't have a $9 trillion balance sheet without, they haven't even really started unwinding it yet, and look at the pain. Now, could they capitulate and give in? Well, if they do, you're going to have inflation still ripping everybody's head off, and this country is going to go through massive, yeah, you could save the market, but you know your general population is going to get utterly obliterated. So that's their decision at this point. Do I save the market and screw most of America over with continued high inflation, or do we sacrifice the friggin' market, which has been pumped up beyond absurd levels, and try to get this inflation under control? And that's going to get really interesting. Because look, even to return to this long-term trend line, even if we return to a sensible long-term trend line, look how far it could potentially fall. Sorry, mini rant there. So yes, we will get rallies. Yes, you will get buying opportunities, but put them in perspective. Oh, yeah, I mean, his tweets today are just, I don't even want to talk about him. He's got to save his butt. How do I block how do I block this crap coming in this feed? Isn't it better to do options while the bear market is in bear market before investing in the long term? John, it depends. It depends. Look, there are good option plays. There are times to play options. There are times to use option strategies. There'll be times, you know what, with the volatility getting pumped up that you'll want to take advantage, but you really have to understand options. There are too many people, and I don't know your background. And I'm going to put this out there. For people who thought option trading was easy because things get pumped up like a Tesla or a bull market where you just keep buying options and, oh, look, I'm making easy money. This gets a little more difficult because you have to understand the nature of the volatility. Because especially when volatility is super pumped, if you just go blindly buying options, yes, the market can go in your direction, but volatility can come down very drastically, and you could not even make money getting the call right. Now, there are great option plays, especially when we get the rollover in volatility, like off a rally with pumped up volatility. If you're doing strategies that capture the Vega and directional strategies that capture the Vega, you can use options. But if you have no idea what I'm talking about, you probably shouldn't be doing it. With our current lack of competency and leadership, a long-term bottom will prove to be very elusive. Yes, I completely agree. And this week is going to be very telling for the Fed. I want to hear this press conference Wednesday afternoon because that's going to give, I'll be able to make a better assessment after I see with the market carnage and how they hold the press conference and whether they're going to stick to their guns or whether they're going to fold like a cheap suit. Because if they fold and we get another insane just, hey, we're going back to not fighting inflation, let's save the market, the next time it rolls over, it was going to just be the move that wipes out more than you ever want to see. All right. I see that I have spam chat. Yeah, I'm going to go through and deal with. I don't even know. I got to deal with that. There's no easy way to block here that stuff. It's garbage. Hey, maybe it means the channel's getting more popular. And by the way, I'm not putting it up on the screen, so if you're watching this on replay, it's just a bunch of spam stuff. But if we're getting spammed, maybe we're getting popular. Thank you. Thank you for reporting it, Sashi. If anybody else, yes, please report this crap. I can't do it while I'm in eCam. Options are different. And I can talk about options credibly because I was an options market maker. but there are too few people who really understand, and a lot of the stuff that's pumped out to retail. There are some good options instructors out there who do know their stuff, but a lot of people, they're just using it to get leverage, and they're instructing people to trade like Tesla with options for the leverage because you can turn your account, but you can also blow yourself up really quickly when stuff turns. And there's a lot of crap option strategies, that people have gotten away with. You're selling out of the money calls, sell deep out of the money calls, sell those 80%, 90% out of the money calls. Well, these are the kind of markets that just rip yourself and blow your account completely sky high, because those options in a bull market that never came into play, in a bear market, they get tagged. And then what your little risk, you accumulate lots of small wins at a very high success rate, but one or two big blow-ups and you're done. Well, I do a live trading conference on Wednesday. I'll be at the live stream after the close. I'm not live streaming during the Fed because then I can't focus on the markets and the live stream. I'm not doing anybody a service then, splitting my attention. We're in a bear market. Oh, no, Elon. Oh, no, Elon, please don't send those bots after me. Thank you for reporting the spams. All right, everybody. Just be careful. That's my overall message. If you don't have a trade, there's no harm in sitting this kind of stuff out. When we get some signals, I wouldn't even suggest, unless you're really nimble. I've listed some aggressive stuff. I wouldn't even recommend it because you have to be really nimble. There's firms, yeah. They doing that on nat gas, yeah. You can get vaporized. Boy, I saw people when I first started trading that got. Whew, I've seen clearing firms been taken down by people. One individual in particular, and I'm not going to name it, is when I first started trading, blew up. And literally with an option stuff, got whipsawed in the bond market with and I don't know why the clearing firm didn't manage his position better, but got whipsawed on both ends of a butterfly, and they liquidated one side, then liquidated the other side, massive losses, took down clearing firm. And this was a pro who didn't manage risk. So that's why I'm stressing that. And don't ever be afraid of missing a trade. There's always another trade. You keep your powder dry, you keep your account intact, and then you wait for the good trades. And this is a tough trading environment. You are welcome, Anissa. You are welcome, Brian. You are welcome, Amit. Thank you for being here, Rich. Money takes money a lot easier than it dishes it out. Completely agree. No, it was not. It was not Goldman Sachs. It had nothing to do with Goldman. This was a futures. It was futures related. It was in the bond market, bond futures. You have a great evening too. I will be here. Remember, PPI tomorrow, 7:30 Central. I will be on at 8 Central. Don't do anything stupid, please. You are welcome, AP's World. We'll see. Done again. Don't worry about missing a trade. Talk to everyone later. Bye for now.